Hello everybody, welcome to another one of my investing videos. My name is Mark, and in this video I'm going to talk a little bit how to manage your option trades. And I was busy this morning. My 105 call that I sold to open a week ago, it was going to expire today, so the first thing that I did was I rolled that call out, and I rolled it out 2 weeks, and I'll explain in a minute why I did that. The other thing I did was I bought another call. So now I have two call options. I have this call, which is my 105 call, and that's my leap call. I bought it back on the 4th. And then this is my new call. I bought a $110 call, and I spent $1,460 for this. And again, it is a leap. It expires January of 2021, and that is exactly 700 days from now, which is 100 weeks. And then on both of those calls, I sold the open weekly calls, but I sold the open weeklies expiring 2 weeks from now, and I'll explain why I did that. So if we go to the option chain of Microsoft here, and let's look at the $110 call. So actually, let me go back and explain what I did. So I sold the open. I bought to close my 105 that was expiring today, and I sold to open another 105. And actually, let's go to the transaction so you can see for yourself. So here's the call that I bought to close. I spent $320, and this was the 105. It was expiring today, February 15th, day after Valentine's Day. And then I sold to open another 105, and I went out 2 weeks, and I took in a credit. I took in $354, which is a credit of about $34, and it expires in 2 weeks. And then the very next thing I did is I bought another call, so I now have two call options, and I spent $1,460 and some change for that. And then I sold, so I bought to open the 110, expires in 2021, and then I sold to open a 111, and it expires in two weeks, and I took in $39. Okay, now if I make $39 every 2 weeks, that's about $20 a week, and there's exactly 100 weeks until these calls expire. So if I make $20 a week, 20 times 100 weeks, that would be $2,000, right? So I feel like that's very easy for me to do. I'm not worried about the day-to-day fluctuations. In the next week or two, I'll have days where you will see red numbers. And today is a red number day. I'm down a little bit. But in the long run, the premium will catch up and I will make some money. And I'll just tell you right now, my goal is to make a 30% return. And so I'm hoping to get this money close to $50,000 by the end of this year. That's my goal. Last year, my goal was to make 10%, and I exceeded that, and I made 16%. And so now I upped my goal a little bit. And so I'm going to really try to double down and buy more calls and put in a little bit more of my money into the market here. Now let's go to the option chain and let me explain why I sold to open these calls 2 weeks. Normally I like to do a week, but if we look at let's look at the 111 call. Okay, so here's the 111 call. Now if I sold to open a 111, and it's dropped a lot. When I did all this in the morning, and this 111 call was at about $11. Okay. Now it's at 6 and 8 because Microsoft's dropping back down. So it did not make the breakout that I thought it might do. Microsoft gapped up today. It went over 108, and I thought, well, is Microsoft going to make a breakout, or is it just a smoke screen? Turns out it's probably just bells and whistles and smoke, and it's going right back down into its range, which is fine. But anyways, the 111 here, earlier this was at about $11, and now let me go 2 weeks out, $14. And notice how the 111 is worth $30. Now earlier, this 111 was worth like $36. Microsoft's dropped back down, so now it's only worth $30. But if we go by the earlier numbers, if I would have sold to open a weekly 111, I would have collected $10 or $11. But instead, I sell to open the 111 and I make $36. So, I mean, you can do the math. If I'm making $10 a week in 2 weeks, I make $20. Why would I want $20 when I can make $36, right? So that's why I sold to open that 111. And the 111, I got, what did I get for the 111? I got $40 for the 111. And again, that's 2 weeks out. So I would have got less money. It makes more sense to sell to open the 2 weeks than the 1 weeks. So that's why I did that. And same thing with the 105. I made a $34 credit, whereas had I would have did a week, it would have only been like $10. So again, it made more sense for me to sell to open the calls 2 weeks expiring instead of 1 week. So now, the reason why I bought another call, let's look at the chart here. Let me go to the chart. And here's a chart. This is a 1-day chart. Now first, let's look at a 6-month chart. This is a 6-month chart. And in the last 6 months, let me get rid of this. In the last 6 months, Microsoft has a high of about 115. Then it dropped down, and then it has resistance of about the 110, 111, 112. And then recently, this was when the market was going through some major turbulence a couple months ago. Microsoft went all the way to $94, but it only did that once, and it immediately came back up. And if we shrink it down to 3 months, I feel that its new level of support is right in here, right at about the low hundreds, and its level of resistance is right here. Okay. Now, if we look at what Microsoft did today, here's a 5-day chart, and let me get rid of this. Okay. This is today right here. So Microsoft did a big move when it opened, and I didn't know if Microsoft was going to make a breakout of its resistance, because the more times that a stock touches its resistance, the weaker that resistance gets. It's called testing. And it again tested the resistance, and it looks like it's not going to break out, and it'll probably even go back down to 105 for all I know. This is the last 5 days, and that's the 105. So if we go to a month, it might go back to 105. And so that's why I wanted to sell another 105. And even though I don't make a lot of money in time value, if Microsoft does go back down to 105, let's take a look at how much money I will make overall on my first call. So my first call, I spent $1,600. It's a 105 call, expires 2021. And then I sold to open a 106, made $82, and then I bought it back for $5, so made a profit of about $77. And then I sold to open a 105, took in $127. And here is today, the 15th. So I bought to close that 105, which was expiring today, and then I sold to open another 105, and I took in $354 minus $320, so that's $34 of credit. So if I add $34 to all of this, then I'm making about, let's see, 77 plus 127 is about $200 plus another 34. So let's just say $234 profit, and that would be when this expires on March the 1st. And so I bought the call on where is it at? February the 4th. So in about a month, if Microsoft drops back down below $105, then I will make $230 in premium in my first month. And if I were to make $230 a month, in 10 months, I'll make $2,300 on this $1,600 investment. So I feel totally safe. I feel totally almost risk-free on this first call. Now, because of the move that Microsoft made, because let me go to the 5-day chart, because let me get rid of all this, because of this move right there, because it gapped up and I didn't know if Microsoft was going to break out. That's why I decided to buy another call. So I now have 2 call options instead of 1 call options, and so I'm basically doubling down on the idea that I do not believe that Microsoft is going to tank down to, let's say, $100 or $95. I believe that if Microsoft does go down, it'll go down slowly, but it will basically trade in its range. And let me get rid of this. And here's its month, 1 month chart. Actually, let me go to the 3-month chart. And my belief is that Microsoft will continue to trade in its little narrow range. And these kind of ranges, these kind of narrow price action movements are perfect for doing these kind of option strategies where you're buying to open long calls and you're selling to open weekly calls, because you can make a lot of money on the time decay, as I've explained many times in many of my videos. That let's say you're brand new to Microsoft and you want to buy a call, and let's say you buy this 105 call, the market is still open. Today is February 15th, and let's say you buy this for, let's say let's say in the middle, $1,650, and right now Microsoft's at 107.68, and then so you buy that call, you spend $1,650, and then you sell to open a weekly call. Let's say you sell to 108, and you collect $70, let's say. Now there's 700 days until the long call expires. So if you're making, there's 7 days in a week, so that's 100 weeks. So if you're making $70 a week, you're going to make $7,000 on your $1,650 investment. And that's what I call dang good return on your money. That's what I call darn good risk reward ratio. Low risk, high reward. That's the name of the game. And again, the reason why I bought another call, I didn't know if Microsoft was going to break out. And this is the 5-day chart. I didn't know if it was going to go to new heights or if it was going to go back down. And it looks like Microsoft might be going back down to its regular range. But every time a stock hits its resistance, every time it touches up there and then touches up there and touches up there, the likelihood that eventually the breakout will happen becomes greater and greater and greater. So that's something to keep in mind. Now, these chart patterns, these price movements, they're not crystal balls. They don't tell you what the stock's going to do. They just kind of give you a roadmap of what the stock has been doing, and then you kind of make the decision for yourself based on all the information that you have, what's going on in the world, what's going on in the news, what's the Federal Reserve going to do, earnings, etc., etc. So that's what I got going on right now. So again, the main thing I did was I was busy this morning. I bought to close my 105 and sold to open another 105, and these calls expire in 2 weeks, not 1 week. And I explained why I did that, because the money is better for 2-week calls than it is for the 1-week calls. And then the next thing I did was I bought another call. I now have 2 calls, and I spent $1,460 for this 110. I still have the 105, and then I sold to open a 111, took in $40. I feel totally comfortable. And again, the only way that I really get burned, that I really have problems, is if Microsoft drops hard and fast, goes down to $100 or $95. Something crazy happens, and then I have to make a decision. Do I close out of all of this and just take a loss, or do I sell to open lower strike prices? And so we'll see what happens here in the next 2 weeks, and if I need to do anything. But in the meantime, of course, I don't believe any of that's going to happen, or I wouldn't be doing what I'm doing right now with my money. So I put my money where my mouth is. I believe that Microsoft is a nice, steady stock, and hopefully this works out for me. My goal, again, is to make 30% return on my money, and that's another reason why I bought another call. It would have been, in the old days, last year, my goal was to make 10%, and I hit that goal. I made 16%. And so this year I could have just hung on to the one call and just sold to open another 105 out 2 weeks. Perfectly safe and sound doing that, but it would be pretty hard for me to make 30% return with only one call. And so that's why I'm going to buy and sell more and more calls or puts. And that's one of the ideas that I have, is that if Microsoft does drop hard and fast, I'm going to buy a put option, and I'm going to start doing spreads on the puts. So we will see what happens, and that's it for this video. And as always, if you have any questions about what I'm doing with my money, why did I do what I'm going to do, or anything in general, feel free to leave a comment in the comment section. Thank you for watching, and until next time, I will see you in the next video.